Here they give us some numbers from the general ledger and they want us to prepare a trial balance as of June 30th, 2022. All account balances are normal. Okay, so we have to remember ALOR, A-L-O-R-E, right? Assets, liabilities, owner's equity, revenues and expenses. And we said that the first one and the last one are debit credit. And then the ones in the middle are opposite. Okay, and whatever increases the account is its normal balance. So for example, cash increases with a debit, so that means that the normal balance for an asset is a debit. Okay, so I'm going to go down through here again, and I recommend that you actually do this. It's an extra step, but it will help you. So accounts payable is a current liability. Cash is a current asset. Common stock is stockholders' equity. Dividends, that's kind of like stockholders' equity. Equipment, that's property, plant, and equipment. Service revenue, okay, that's a revenue. Accounts receivable is a current asset. Salaries and wages is an expense. And rent expense is an expense. So we want to start off with our current assets and current liabilities. So cash is our first current asset, because cash, we're going to do this in the order of liquidity. So the faster it's going to be converted to cash, or the faster it's going to be used up, that's going to increase its liquidity. Okay, so we got that. There's another one. Yep, accounts receivable. Okay, so I'm just going to move this down here too. I know I'm kind of cheating a little bit while you're writing this out. I'm just cutting and pasting, but that's all right. We don't have any other current assets. Do we have any other assets? Well, yeah, we have our equipment. So that's what we have for our assets. Now we want to look for current liabilities. Well, accounts payable is generally going to go first. However, the balance is a credit, right? Right here, remember, liabilities have credit balances. So what else do we have? Do we have any other liabilities? No. So what's the next one we have? Stockholders' equity. So we have common stock and dividends. Both are going to go down here. But we're going to have to move the dollar amounts over to the credit side, right? Because stockholders' equity, owner's equity right here, increases with a debit. Now revenue increases retained earnings, so that will be a credit balance. Okay, revenue is a credit, and then these last two expenses are going to be a debit. Okay, so salaries and wages expense are expenses. They decrease retained earnings, which decreases stockholders' equity. Okay, now just to make sure that they balance, we're going to want to total these up. Well, I don't know what happened there. Let's try this again. Okay, and then I'm just going to drag that over here, and we're out of balance. What did we do wrong here? Yep, that's right. You see that dividends right there? Dividends decreases retained earnings, which means it should be a debit. Good catch. All right. Now, I hope that this helps. If you have any questions, please don't hesitate to ask, okay?